Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective, and that means we're looking at the charts, asking ourselves where are the significant points and how does the market deal with those points, right? Because it's when the market does tests that we figure out things. It's where we get clues. Today we had some tests. Today we had some successes on those tests if you're bullish. So we'll look at that. As far as what happened today, let's take a look at the markets. Let's take a look at the numbers actually and see what we got. Starting here with the dollar down. We were down in, actually we came off the highs in Europe. So Swiss actually went negative, but you stayed up on the others. Over in Asia, Nikkei goes up. Bank of Japan does their thing. We'll talk about that a little bit because almost every article I've read today is negative on what the BOJ did, and I'd like to just discuss that quickly. We'll get to that. Elsewhere, here, U.S. FOMC, right, does their thing, and what do? They do nothing. They're not going to raise rates. They say they're going to raise rates by the end of the year. That pretty much says that it's going to be in December, because it's kind of hard to believe you're going to raise rates 3 days before an election. Or maybe I guess you could raise it in between, but I don't think that's going to happen either. So you basically on hold until December, gives the markets the green lights, and what do? They go up on it. Bonds reverse on that, driving yields down. If you look across the bond yield curves out there, right, they look pretty positive today. Then you go over to the metals. 3% on oil, 3% on the silver, and gold takes off 1.5% higher. They love the fact that the Fed's going to keep the easy money going, and they do their big bounce. Let's go to the charts. I'm going to start with the NDX. So when I said at the top of the show, what we do is we look for areas of significance. Areas of significance in this neoclassical model are pretty simple. They're anchor bars. Anchor bars come in 3 types. One of those types is what you see here, which are swing point highs. And so when I'm looking at the swing point highs on this chart, what you're going to see is H's, right? Those H's designate highs. There's an algorithmic method that we figure out what highs are. It's pretty simple. You can do it by hand if you want. The programs do it for us. You get the highs, you're going to test them. And when you test them, you want to get over them. Whether you get over them with more volume or not is not the big story. It's, do you get over them and do you stay over them? And in this case, we actually got over them, and we got over them with more volume on all 3 of them. And so we're going to actually have a green arrow like you see here pointing upward tomorrow. What does that say? Trend changed. And not only did it changed with more volume. In other words, you went over your highs and you did it with more volume. That's as good as it gets. It says that this trend transition can continue for some period of time. And the good thing about it, and what I've been telling members for quite a while, is that I expect this is going to resolve to the upside. And I've been saying that here. Back when this thing was doing this whole consolidation, members and I were looking for resets of trend. Why was that? Well, because the MTTFs were stretched. If you look at the MTTFs back at that point in time, they were bullish and they were about 70+%. When you get up into the 70-80% range on the MTTF, and that means the mean time to failure of a trend, you won't see that anywhere else. It's something that was created as part of this model to give us timing. When it gets up that high, the probabilities, cumulative probabilities of a failure, in other words, a trend transition, escalate, right? It's probably going to happen. You get it, and what do you want? You have young trends here. Well, you don't have it on the long term because the Fed and the manipulations in the markets have kept this market high forever, right? They never have reset on the long term. And so we're dealing with something that's kind of out of this league. If you go look at anybody that talks about the length of this this move higher, this bullish move, it's the second longest in history, and that's what this reflects. It doesn't usually do this, but it is. Short intermediate term is still young, 15%. This thing can go to 70. How long will it take it to get to 70? Well, you could actually, on the cube, you can click on that and you can see, but it's another 6 months. Now that you got a reset here, you'll see that tomorrow that trend is young. That one can go another 7-8 weeks. So this thing has basically set up the green light to try to push higher. You break 3 swing point highs, you get over them, volume expands. It's everything you want. If you pull over the weekly chart, you've got the ABCD structures in place, right? They've been in place for a while. We can start talking about them again, right? Because now those are in play again. Plus, you have new ones. Oh my gosh, new ones, right? They go even higher. All I see is negativity about this market, folks. Price trumps everything else when it comes down to it. Volume qualifies it. Doesn't make it fail, it qualifies it. It gives you color, right? It adds color to your picture. And then time, of course, we have with MTTFs and a few other tools that we use. So what does this market want to do? Well, it wants to go higher. You can't argue with the fact that it's broken out and it wants to go higher. Can that change? Yeah, it can change, and we'll talk about that in a bit. But right now, you look at this, you got to say to yourself, wow, sweet picture. You get over on the NASDAQ as well. Let's go to the Russell. Now, another concept that's in neoclassical that you don't see elsewhere is some notion of a bearish retest regen and a bullish retest regen. What does that mean? It means when price breaks down, a trend transition, you're going to try to come back to it and test it and try to get back over it. Or if you can't, you're going to regenerate. In other words, you're going to regenerate to the downside. Well, when you get over it, which it just did today in a big way, that says, hey, this is no longer going to stop us, right? Buyers have come in, they've voted with their feet, they've bought more, they're going to push it back to the high. Break down bars to high, that's where they're going to take it. That's the next stop on the Russell. S&P, now the S&P is trailing everything else along with the Dow. And that's because the S&P is broader. It's the one you really want to see get over its bearish retest regen, and that area is right there. That's what it's coming into. And not only do you have the one, you have 3 of them. They all coincide almost exactly the same price point. And as they come into at the bottom of this one, as they come into that area, that's the higher retest regen zone. If you want to look real close, that's the bar, right? It's the breakdown bar. That gets you over both of these bearish retest regen zones. That tells you more than likely this one's going to new highs as well. So if you're watching a spot, watch that price point. It's about 21.69. You get over that on the cash, you're going to go higher. That's and what is it probably going to do? Well, you already got 3 indexes telling you it wants to go higher. I suspect this one's going to go higher. And it's probably going to try to attack it before the week's out and get over it. That's the indexes. Now, what could go wrong? Well, what could go wrong brings us back to the BOJ. And if we look at the BOJ, what did they do? So they come out, and I'm going to pull up the yen because that's the main thing that you want to be watching here. But what did they do? You know, I've seen so many, as I said, I've seen every article I've read this afternoon. Every one of them's negative. Every one of them telling you that there's no more bullets, that, you know, the Bank of Japan's going to fail, blah, blah, blah. You know, maybe it is. You know, I mean, I'm not going to sit here and tell you it ain't. I think this whole escapade that we've been on now for 7 years is a joke. But, you know, sometimes it can be a joke for a very long time. And the joke's on you if you're going to short into this thing, right? The joke's on you if you didn't buy this thing, right? I mean, that's where the joke is. And so, you know, leave aside all the fundamental stuff. Watch price. Watch where people put their money. If they put their money in it and they drive it higher, then maybe you ought to be on that side of the equation. So let's back up. What did they do? Okay, so the Bank of Japan's decided because they can't make other things work, what they're going to do now is they're going to try to control the long end of the curve. Whoa, let's talk about that. So control the long end of the curve. Historically, the long end of the curve has always been controlled by the market. Can the central banks control that? Can they make that be what they want it to be? Well, I don't know, because they've been able to do everything else to some extent, right? At least for some period of time. Let's see what they can do. Is it shown in the charts somewhere? Well, if it's going to be shown in the charts, what's going to happen is this yen is not going to stop going up, because that's not what they want. And so if we look at the yen, it does push today. It pushes with volume. But folks, it's still inside the range. In other words, if we pull this back, put it on a weekly, this is inside the range. Market doesn't get excited until you get outside of whatever range you're in, right? The range up here has kind of been that. They've been stair-stepping this thing higher, and I don't mean to say that these are exact ranges, but you can kind of see stair-stepping higher here. Okay, as it stair-steps, when it pushes out, right, that's when the market notices. If you get over these highs, the market's going to notice. And it's going to notice not just because of that chart. It's going to notice because of a long-term chart. And we go back to that bearish retest, regenerate that I've been talking about. This is on a monthly time frame. It's coming up. It's testing the top again. Now, first things first here, usually after 6 bars, in other words, if you go in time 6 bars, in this case 6 months, and you don't retest that area, usually you're only going to get about 1/3 of the way into it. Well, this got a lot more than 1/3. It got all the way to the top. And it's up there doing it again. If this doesn't turn, that's saying that, hey, the long-term trend that's been in effect now for ages, right? That long-term trend has changed if it doesn't come back down. And it's going to say at worst, it's probably this way on this time frame. That's not what the BOJ wants to see. I think that's where you want to be focused if you're watching to see if this new twist that's been rolled out by the Bank of Japan is going to work. If it doesn't, I think it becomes a problem. Right now, nobody thinks it's a problem except for all the commentators. I mean, nobody in terms of who's buying or selling this market. If that starts to happen, and if we see equities do what you would expect them to do, and that is not be happy when that happens, then maybe we got something to back up all the commentators. And if that doesn't happen, then they're all just blowing smoke again, which they do quite often. So don't pay attention to all the stuff that you read. Pay attention to what happens on the charts neoclassically, and you'll be a lot better off. By the way, if this does get over it, I don't think it's going to run, beeline straight higher, right? You got this big bar here, and that bar's low is just above it. That's partly what's keeping it down, partly this retest regen zone, and partly that it's coming into that area. So that price point on the yen is 97.54 in terms of the FXY, and if we look at this high, you got the 96.75. So even if this pushes up there, I wouldn't jump on the bandwagon until you get into that big bar and stay into it. And you push into it maybe 1/3 or so higher. That's the BOJ. So FOMC, they didn't do anything. What does that do? Well, that certainly helps bonds. If we go look at the bond rates, and let me go grab those, you'll see that we started seeing the TLT flip around. So let's pull up the TLT. So here's the flip around. It's got to get over this breakdown bar, this big high volume wide press bar. That's an anchor bar in neoclassical terms. If you get over it, right, then you can go up to the next level. Where's the next level? The next level is going to be the bearish retest regens that you see over here in this area. So you got to get over this. You get over that, you can go to the next level. Bonds, prices going up does what? Pushes yields down. That's what the Fed would prefer to see probably. I don't know that the overseas markets are that concerned about bonds yet. If the bonds elsewhere, not just here, but elsewhere start to have problems, then we'll see more punishment, if we will, in the equity markets. But so far, I don't really see that. I'm looking up here. I'm going to a couple of funds that are international. Here's the Vanguard Bond Index funds. This is a total bond. They had came off. That was putting some pressure on the market, but now they're trying to bounce back up. Let's see how they behave as they bounce back up. And if you look at the BNDX, which is another measure of about the same thing, you got the same sort of thing here. So don't think that the bonds are going to kill you. Not yet. I think if we have something to worry about, it's the BOJ, and if that yen really starts to skyrocket. If it does, market will probably hiccup. If it doesn't, it's more of the same, folks. It's up. It's been that way forever, and it doesn't look like it stops here. I've been saying for a while this probably resolves to the upside. That looks to be what it's doing. You know, in the membership funds, you know, the portfolio that I manage and that I share with members, that fund is, you know, kicking rear, so to speak, right? I mean, that fund, that portfolio, if I come up here, pop all the way down. So if I pull over and show you the portfolio here, what you're going to see is the positions, you know, that blacked them out here so you can't see what we're invested in because that wouldn't be fair, right? But we're 8.5, almost, what is that, 8.75% higher on the year. We've had a nice run again. We've had good runs all year long. Now we've got another big run going. You got to stay invested. You got to stay in those things that can make you money. And it looks like we're about 80% invested right now. That's where we're at. That's probably where you ought to be if you're not. And if you're not, maybe you want to think about joining us and taking a look at what we do. That's pretty simple to do. What you do is come over to the site, just pop in here and hit the Get Started button and take a look at what's going on at TA today. Have a great one. Take care. Good night.